Episode of Experience Annex. As you already know, Experience Annex is a platform for role models, exemplary leaders, world-class professionals, and legendary entrepreneurs. We are very excited to have Mr. Johnson Chukwu, the Managing Director and CEO of Cowry Asset Management on Experience Annex today, to share his wisdom with the world by sharing our role models make the world a better place. Today's episode is going to be very interesting because asset management is an area few people know about, but very critical for managing wealth. Mr. Johnson Chukwu, as I said, is the founder and managing director of Cowry Asset Management Ltd. He's a chairman, Standard Alliance Insurance. He's a graduate of the University of Lagos, where he got his BSc. He got his Masters of Business Administration, MBA, from Lagos Business School, part of Pan Atlantic University. He's a fellow of the Institute of Chartered Accountants of Nigeria, and also a fellow of the Chartered Institute of Taxation of Nigeria. He's an honorary member, Chartered Institute of Bankers of Nigeria. He has attended several advanced management courses, including the IEAC Business School, University of Navarra, Barcelona, Spain, and Wharton Business School, University of Pennsylvania in Philadelphia, USA. He's a facilitator with therapy, a world leader in business events, with offices in London, New York, Singapore, Sydney, Dubai, and Johannesburg. He's also a facilitator for the Financial Institute Training Center of Nigeria, a specialized training institution established by the Central Bank of Nigeria in collaboration with the Bankers Committee. He also facilitates for the Chartered Institute of Accountants of Nigeria. He's a regular media commentator on the economy, capital markets, and the banking industry. Before setting up Cowry Asset Management, Mr. Chukwu also worked in several institutions, several banks, including Spring Bank, Guardian Express Bank, Diamond Bank, and Intercontinental Bank. Mr. Chukwu, welcome to Experience Annex.
My pleasure.
We have read your profile, very brief profile. I'm sure that to read your entire profile will take the whole day. Can you just shed light? Can you tell our customers, can you tell our listeners out there a little bit more about yourself? What makes Mr. Chukwu, the man I call a Tuekon, tick?
Well, I think it's determination to succeed and to survive and succeed. That makes all the difference. As a very young boy, at the age of 13, I had made up my mind I wanted to study accounting, and I wanted a profession that I could practice and have an average level of standard of living without necessarily going. I had decided that I was going to go into a profession, to study a profession that would allow me to have an average standard of living at a minimum without necessarily going into any form of corrupt engagement, like collecting bribe and all the rest. So I was determined to be the best I could be. I was driven by a zeal, an extreme zeal to succeed, and that's what made all the difference.
So you were really driven from a very young age.
Yes.
You are determined to read accounting.
Yes, I do.
Which set you up to really excel in the financial industry at the young age of 13.
Yes.
Can you tell our audience a little bit about your family?
Well, I come from a very, we'll call it mid-sized family. We are basically a family that we grew up in the East. I was born and brought up in, now it's called a state called Abia State, then Odimo State. And my nuclear family was a very compact family. It was a family where we were particularly close to our father. We keep saying that, in fact, today, up to today, my wife keeps saying that she doesn't really know what it's about this our father, because he only met my father when he was already a bit advanced, so she didn't really get to know him much. But so we were particularly close to our father, though our mother is still there, but our father is no longer there. And the key thing about our family upbringing is that we were so close that there was nothing we couldn't discuss with our parents. There was nothing about us that they were not part of. So we grew up a very close-knitted family, and that helped in shaping our behavior. It was a family that my father knew every little detail of what I was doing. And at any point in time, you could have somebody that was there to guide you. My mother was a disciplinarian. My father was a bit more accommodative. But my mother was the one that you must fall into line. In fact, it was so bad that my mother would ensure that you walk, if you were a male child, you walk erect. She will show you how to walk as a man. You shouldn't be sloppy, your shoulders shouldn't drop. And I learned those things at a very tender age. In my very young age, before the age of 10, that you must carry yourself straight, you must lift your shoulders and walk with confidence. You must not be sloppy, and when you are walking, you must walk with a gait. And it could aim you a slap by dragging your feet while walking. So we had the two words, the accommodative father and the disciplinarian mother. And that helped in shaping our
So would you say that your father was your main role model?
I would say I don't really have a role model interestingly in life. But my father showed us what we call love. It's something we still cherish 20 years after he had gone. Of course, he died about 15 years ago. But we still cherish the way he treated us. My wife would say that, look, even my elder sisters will still talk about their father as if they are still young, little kids. And I'll give you a classical example. When I had graduated and came home one day, I came in with my friend, who happened to be the elder brother. Unfortunately, he's late now, to my wife. And then my father came. He went to his bar and brought her the best of wine. I said we should choose. And then my friend was looking and saying, I couldn't have imagined this. This is a father, and I was in my early 20s, and my father could go and get the best of wine and say I should choose for me and my friend to share. So that's the level of friendship. It was a kind of relation that bordered on friendship. That to the point that we had nothing to hide from him. We had to confide in him, and he helped shape us. He made it difficult for us to veer off, because at any point in time, he knew where we were.
So, can you tell us a little bit about your early career?
Well, interestingly, in my early career, I started my career in the banking industry. Immediately I graduated, I served in a bank, then Nigeria Intercontinental Merchant Bank, which is an integral part of Access Bank today. And one of the things that my colleagues will remember very well was that I was somebody who would bend down his desk and walk without raising his face, and he could stand in front of me for 1 hour and I wouldn't notice you are there.
Sorry, sir.
And he could stand in front of me for 1 hour, I wouldn't notice you are there. But a few things shaped my early career. One was my first working day, and I was just a copper. The very first day I went to work in the bank, I happened to be assigned to a man called Yemi Odisholu. I still owe him a debt of gratitude. And Yemi Odisholu,
You said a man
called Yemi Odisholu.
Okay.
Odisholu. And the very day I have gone through some kind of guidance by the human resource, but I said, okay, by 6 you need to come down and join the staff bus. So by 6 I wanted to go. He said I should wait. By 7 the staff bus had left. So, and I had packed my things. He came out and asked where I was going to. I said I wanted to go home. He said, no, you don't work with me and go home by this time. But they were just starting a meeting. And then that meeting stretched to the 11 in the night. That was when I was released as a copper. In fact, what happened was he came out, because I wasn't part of that meeting, and he gave me files, loads of files, credit files, and said I should start reading. So while the management was having the meeting, I was reading credit files. And when I finished reading, he came out again around 9:30 and asked me if I could derive certain formula, like the future value annuity. And then he gave me an HP calculator. And remember, I studied accounting. But interestingly, I couldn't have learned those things in the school. So I had to go through the files to know how those figures were derived. By the time I finished that very day, I knew I had entered a different world. That this world is a world where you need to be strong, where you need to be committed, where you need to persevere, and where you need to show knowledge. And those things were values I had to grasp to be able to succeed in that environment.
Okay, so your first encounter with your supervisor at Intercontinental really set the tone for your career.
Yes.
He taught you depth, he taught you commitment, he taught you just, going the extra mile. Others had left as early as 6 o'clock, and you were still there. All right, so let's talk about Cowry Assets, your company, and the stock market. You have been running Cowry Asset Management now for about 11 years, and the company is growing from strength to strength, I would say. What has it been like?
Well, it's been both very exciting and quite challenging as well. We've had periods of very fast growth when we started. We had period of misfortune when the capital market crashed and we lost billions of naira. We had about 3-4 years of paying off debt to the bank, but we made a commitment that we're going to pay every kobo, and we did, because we felt that our integrity was beyond the money we're going to pay. And we were among the first to exit the margin loan quagmire with our bankers. So, and then subsequently we have diversified from just a stockbroking house, because we actually started as a stockbroking house. And then we now have issuing house license, we have a Cowry consulting, we have broadened our service offering. Because among the things we learned during the crisis was that, look, you cannot survive in an emerging market economy on a single income line. So we needed to broaden our income line so that no matter how robust or how buoyant a sector is, there's always a lean period. And that helped us diversify our income streams so that no matter what happens in the economy, we're able to meet, at least at the minimum, our running expenses.
Okay, so how has the stock market changed since the crash?
Well, the stock market has moved from a purely speculative market to a value-driven market. Prior to the crash, it was all about speculation, what was called head syndrome. Whatever stock that was moving up, everybody jumped at it, irrespective of whether the fundamentals are strong or not. But after the crash, people realized that it's not all that glitters is gold. People realized the need to go to fundamental analysis and technical analysis. People realize that you need to do value investing, and just beyond the excitement of the market, that the market is in this direction. So we now have more discerning investors in the market. We have people who are hunting for values, or value hunters, unlike what we have pure speculators in the past. So the market has changed a lot.
So the market has become more sophisticated.
Absolutely.
Okay, so would you recommend people, interested people, to jump into the market right now and start buying stocks?
Yes. You see, on a long-term basis, the equities market always outperform every other market in any economy. There might always be periods of bullish and bearish run, or bearish run. But ultimately, if you take the medium to long-term perspective, the equity market will normally outperform even the fixed income market. So for value investors, for those who have the surplus units, it's a window to maximize or improve your wealth. But I always stand this caveat: do not go to the market if you don't understand it. Seek for a knowledgeable advisor who has integrity to guide you in the market. That is why we're out there. That's why Cowry is there. That's why other houses are there. We are there to provide that service. We are there to guide investors on what to invest and what to avoid. Because if you jump into any market that you don't understand, the likelihood you get burnt is high.
So there is this notion that the stock market is only for the rich people. Can a poor man, by that I mean those who don't earn very fast salaries, people like teachers, nurses, and lower level civil servants, just to mention three, can they afford to play in the stock market?
Yes. Why I say yes is beyond that, but I also want to mention that, look, there are several other investment instruments available in the market. But the equity market is good for anybody. The key thing I always say, look, the equity market is long-term for long-term purposes. So if any of the classes of income earners you mentioned wants to invest, then they need to invest their surplus income. And what I mean by surplus income, because actually nothing called surplus income other than the fact that the individual must have the discipline to set aside a portion of his or her income and set it aside exclusively for investment purpose, so that you are not tempted to go and live on it. So if you have the discipline to save, then it then follows that the savings should be channeled into assets or asset classes or instruments that the temptation to go and liquefy or convert back to cash is minimal. And the equity instruments provide that. It's one of the best instruments for such purposes. So for teachers, for artisans, they should, once you have the discipline to save, that part of that savings should go into investment. And I recommend strongly that the reason portion of that investment is invested in equities. The other investment classes you can also take, like the fixed income instrument, you still have your normal savings account, you have your time deposits, you have your federal government treasury bills, you have your federal government bonds, and then you have even the real estate instruments, properties. But the key thing is this: you should make sure that you have a diversified portfolio. Part of your portfolio should be in solid form, in form of properties. Some of them should be in liquid form, like fixed income instruments, and then you also have what we call the gaseous form. The gaseous forms those are highly speculative instruments, but the equity market belongs to what I call the liquid segment of instruments. So people should diversify their investment instruments, so that at any point when you have an immediate need, you can actually have something to fall back on.
Okay. When we talk about the stock market, it's like we talk about the capital market. It's a long-term thing. In your best opinion, what time horizon should an investor look at in terms of being able to make some maybe gains?
Well, I would take a cue from what the private equity investors do, because when you talk of private equity, I'm also talking of equity investors. And I always think a time horizon of the neighborhood of 5 years should be a timeline for investments to mature. If you have invested wisely, if you invested right, if you chose your instrument rightly, in a 5-year time, you should have a reasonable level of return on that investment. After 5 years, there's no return. It's time to reconsider that instrument and possibly exit that instrument and invest in something else.
Okay. You are the chairman of an insurance company, and you're also the MD of a stock market, stock management company. It is said that less than 10% of Nigerians have insurance. Can one consider insurance policy as a part of the investment portfolio?
Yes, you have an endowment policy. You also have a life policy. An endowment policy, insurance policy, is an insurance policy that will allow you make regular contributions to for a period of time, after which that instrument will mature, and you get a return, not only what you have invested, including income on what you have invested. So it could actually be for retirement purpose. An endowment policy could be for retirement purpose. It could also be for major expenditure that will occur in future, like educational endowment funds for the training of your children. And it makes it possible for you to save, but it also gives you additional life cover. So in the event that the unexpected happens, the amount that the family will receive will be more than enough to meet their need, particularly if you have invested for a specific purpose, like education education endowment fund. Then you also have a life policy. But beyond that, there's what you call when you're doing an insurance, what you obviously do is putting of risk. And a number of things in life are subject to risk. Take for example, vehicles, it could be stolen, it could have an accident, it could actually hit somebody else, and you may not have the cash to put back that vehicle in the position it was. So it is the duty of an insurance, if you have taken a cover, to indemnify you, which means to put you back in the conditions you were before the occurrence of that unfortunate incident. So insurance is a critical element of today's financial architecture, and I advise Nigerians to embrace it. The level of the number of people, the percentage of Nigerians who are embracing insurance is still not very significant, because you are talking of 10%. Probably because of the level of enlightenment, probably because of cultural issues. For instance, if you want to take a life cover, people will wonder, are you expecting to die? But that's not the case. Death is a certainty. When and how it will occur are the known factors. So people should take insurance covers on their life, on their properties. If you want to take insurance cover for your property, they say, are you wishing evil to befall you? But that's not true. But these things happen. So we need to do a lot of reorientation of Nigerians to appreciate the value of insurance.
What should a typical balanced portfolio, investment portfolio, look like?
Well, it depends on your state in life or your station in life. If you are very young, I will advise your investment portfolio is weighted in favor of risky instruments, high yielding, high growth instruments like equities, in fact, like startup entities, if you are very young. Because one of the things I tell young people is that if you make a mistake, if you lose anything, you have the opportunity to rebuild it. If you are in middle ages, you now need to have some level of balance. Your risk appetite begins to diminish. So you need to hold a reasonable percentage of growth instruments like equities and a reasonable percentage of stable fixed income instruments. Key thing is that at that age, the demand for your cash flow becomes higher. You need to train your children in schools. You have to take care of aged parents and other factors. So you need to also have some reasonable percentage of your investment in instruments that you would not incur costs in liquefying, whose values do not change materially. Then as you age in life, your appetite for risk will also further diminish, and the possibility you will rebuild lost grounds is also lower. So at that point, we recommend that your portfolio is weighted in favor of low risk, low return instruments. Also at that point, your living costs also reduce. Your expenditures in life reduce, because at that point you would have finished training your children and all the rest. You are not pursuing to buy a house and all those things. So you are more interested in having stable income level that will tidy to you through the remaining part of your life. Your portfolio should be weighted in favor of low risk, low return instruments. Okay,
so which is better? You know, I had my father-in-law had investments, in shares in more than 150 companies. Berek batteries, I'm talking about in the 70s, 60s, more than 100 companies. So the question is, which is better, having stock in 3 to 5 solid companies, or having them spreading in up to 30, 50 companies?
Well, I think we already answered that question by saying having stocks in few solid entities. It's always better that you have some level of concentration, though without necessarily compromising some level of diversification. I've talked about diversifying across instruments, fixed income instruments, equity instruments, real estate instruments. But if we're talking about equity instruments, you also need to diversify across sectors. But the diversification should not be that you pick every stock. You need to concentrate on value instruments. And the narrower your portfolio is, the easier it is for you to concentrate on actually managing them. Also, the issue of using advisors, like I mentioned earlier. No advisor will tell you to go and take 150 stocks, invest in 150 stocks. No advisor will tell you to invest in any stock that catches your fancy. So the key thing is ability to get somebody, your advisor, to partner with you in choosing the right stocks, and then keep your spread to a reasonable level that will allow for that becoming too verbose.
Okay, so without bias now, assuming that I inherit 20 million naira, where would you advise me to invest in landed property or in stock, equity stock?
Well, I'll first start by how old are you? What's your risk appetite? Do you expect another income? Is this a one-off? You mentioned inheritance. So it's a one-off income. And then are you still working? Do you earn salaries? If you earn salaries, I will ask you to invest in a growth instrument. Go to equities, do 50% in equities, do the other portion in fixed income. And then if you want to develop real estate, you can now build gradually over time from your salary, your normal salary income, and then income earned from these investments. Okay. If you are a lot more advanced, I will advise that you put most of it in fixed income instruments, maybe federal government debt instruments, because at that point you can be living on the income, and then you are comfortable because your cost of living will be reduced as an older person. So it depends on your situation in life, but ordinarily I would say for a middle-aged person like you, a balance 50% in equities and 50% in fixed income and other instruments. If you're looking at real estate, if you build a house and it's your living property and you don't have income to support the maintenance, the property will deteriorate. For a resident of a place like Lagos, there are several opportunities for mortgage, to access mortgage, either through the Lagos State government or through any of the mortgage entities, so that you build over time and you build from your income, not necessarily to build from a capital that you just received.
Okay. Just for the purpose of our benefit of our audience out there, what is the minimum I need to start building my asset portfolio?
The minimum is ₦1, and I will tell you why I always say ₦1. It's very simple. Like I mentioned, the key thing is discipline to save. Okay. And it doesn't matter whether your income is 20,000 naira or 1 million naira. If you don't have the discipline, you will never save. So if you can set aside 10% of your income at the minimum, and then that amount you could start it in savings account. I can tell you when I started, when I finished secondary school, I opened an account with a bank and I started saving. So that discipline of saving, whatever little money I got, I saved a portion of it. And I always say this: if you're a Christian, for instance, and you believe in tithing, and you can give 10% to the church, you can also discipline yourself to give 10% for your faith. It's just a matter of if you have the discipline and the faith to give 10% to the church for the work of God, which is by every standard is okay, then it also follows that you can also tax yourself for that, to give 10% for your future and the future of your children. So people should not give excuse that their income is so low that they can't save. There must be a consumption that you can forgo, that is discretionary, and that way, that whatever that you would have spent on that consumption, you will save and invest.
Okay. I'm sure that there are people out there listening to this conversation, and maybe some of them would like to maybe work in a company like Cowry Asset Management or become stockbrokers. What qualification does one need to become an asset manager?
Well, the qualification is that you start with interest. I always say, look, whatever anybody has an interest in, you can do. And then, if you're a graduate, you can seek for a job in an asset management company. It doesn't matter what you studied. But I always tell people, look, you must develop the interest in quantitative analysis. Quantitative analysis is very key in human life today. In fact, the global educational system has shifted to what they call STEM, which is science, technology, engineering, and mathematics. And that is driving the global technological revolution. So it also applies to people should be, not everybody is quantitatively inclined, but I want to believe that anybody who wants to apply his or her mind to quantitative, because you should be able to analyze things in a logical format. You should be able to arrive at deductive reasoning. And once you have that, it's all about logic. So anybody can become an asset manager. The other qualifications of getting registered with Securities and Exchange Commission, those are secondary. But the first thing is your interest to develop it. I have people who read sorts of courses working here, and some of my best analysts studied liberal arts, but they decided that they wanted to have a career in asset management, and they developed their mind, and then grasp the tenets of financial matters.
Okay, so what you are saying is really not about whether you read accounting or you read finance, that it's about the passion.
Absolutely.
Okay. All right, so I'm looking, they say Nigeria as a country is the easiest place to make money. What is your opinion?
Well, until we entered into a recession, I mean, at some point our economy growing above 6% year-on-year growth, cumulative year growth was above 6%. So that was creating a lot of opportunities for the economy, for citizens to make money. Beyond that, we have an economy that no sector has matured. So virtually every sector presents opportunities for growth. Call it any sector you mention. You see entertainment industry that is growing in leaps and bounds. We've seen a telecommunications sector that has grown from about 0.2% GDP contribution to about 10% GDP contribution. We have an agriculture sector that is growing to about 23% of the GDP. We don't have infrastructure, so there's opportunity to build infrastructure. We don't have world-class hospitals, there's opportunity in the healthcare. We are looking for quality educational institutions, so the opportunity in the educational sector. So virtually any sector of the country presents opportunities, and that's why people say that this is a land of opportunities. What we have not done is to tap those opportunities to improve the living standard of Nigerians. But the opportunities are there, and they will always be there for the next 10, 20 years. This economy has not even grown, talk of maturing. Unlike when you get to Western countries, there's almost nothing you can start that nobody is doing, has already perfected. So the margins are very thin there, unlike here. So Nigeria is still but also an area that's also of high risk. So you know about the high risk, high return trajectory. So as it is easy to make money, it's also as it is easy to lose money. So anybody who's coming to the country should be conscious of that and then put in place checks and balances, necessary control measures to minimize the risk of losing money. But if you also lose money in any opportunity, any environment, or any opportunity that can give you money can also expose you to losing money.
All right, so let's also wrap up. To wrap up, what is your definition of success?
Success is about contentment. It's about being happy with what you have and your environment. That is my definition of success. It's not a measure of material wealth. There are people who are so rich in terms of material wealth, but they are emotionally poor. So for me, success is all about contentment with what you have and who you are and where you are.
Excellent. Okay. So success is all about contentment, being happy with what you have, who you are. If there's just one more thing you wish to say to our viewers, what would it be?
Well, have faith in God, work hard, and then live a life that your neighbors will be proud to share with you.
Thank you very, very much, Mr. Chukwu, Mr. Otueko, my Otueko, for sparing time to share wisdom on Experience Annex.
My pleasure.
I have been speaking with Mr. Johnson Chukwu, the Managing Director, in fact, the Founder and Managing Director, CEO of Cowry Asset Management Ltd, one of the largest or one of the biggest asset management companies in Nigeria. If you wish to learn more about how to manage your financial assets to play professionally in the stock market, I believe Cowry is a company to call. Listen to today's episode of Experience Annex. Until the next episode, I have been your host, Paul Uduk.